Chairman Powell making paper every hour. Chairman Powell, he got that money power. Hater on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower. Chairman Powell, money machine going bird. Chairman Powell, he ain't playing, this a blur. Gotta follow the data, ain't no time to err. Watch him speak now, with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserve's in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Hater on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower. Chairman Powell, money machine going bird. Chairman Powell, he ain't playing, this a blur. Gotta follow the data, ain't no time to err. Watch him speak now, with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserve's in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Hater on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower. Chairman Powell, money machine going bird. Chairman Powell, he ain't playing, this a blur. Gotta follow the data, ain't no time to err. Watch him speak now, with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserve's in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell.
Share Pow www share Pow www share Pow www
What?
share Pow www share Pow www
What?
share Pow www
Holy crap, I thought my computer was messed up.
www share Pow www share Pow www
Brett.
share Pow www share Pow www share Pow www.
I love you, David B. This is why we cannot have nice things. This is why we can't have nice things, David. No, I love you, man. Shout out to you. Thank you for the super chat, dude. What can I say? What can I say, everybody? Man. We started this years ago. Many, many years ago. We started covering the Fed here. As a Bitcoin and crypto channel, the Fed was always the enemy, but maybe not the adversary. Change that would benefit crypto would come from the Fed. Inflation would come from the Fed. And so we started covering them as the meetings mattered. Nobody back then paid attention to them. They just went under the radar. Maybe some nerds out there like us were watching them. But we followed them month after month, meeting after meeting. And we created more, I would say, than just an event. We created something bigger. Over the years, people and other channels caught on. Mainstream media caught on. Everyone started covering it. And in fact, Powell, Chairman Powell, can I get a Chairman Powell in chat? A little Chairman Powell. Chairman Powell himself became a celebrity. We continued following him despite literally everything. Every market channel, every trading channel, every news outlet following, covering at the same time. You guys still showed up here, and I appreciate that. That's what I likes about you. I appreciate you all. You guys rock. We made this a thing, and it's the end of an era. Today is the last, the final FOMC with Chairman Powell. It's going to be a little emotional. Going to have some tears. That's why I got the shades on so you can't see me cry. But I'm happy to spend this with you. I'm thrilled that you showed up today and are joining us. Right now, hit the like button, subscribe, share out the stream, hype up the chat. Let's get this, let's send this off in style. Let's send this off the way it deserves to, man. This has been a huge thing. Powell will effectively no longer be the chair of the Fed. May 15th or something like that. May 15th, doesn't matter. This is the last FOMC where we will have him speaking, provided nothing insane, crazy happens since. This morning, I believe Warsh was pushed through to a vote. I don't know if that vote happened yet. I don't know. It probably will happen today. I assume he'll be locked in. I assume that's what will happen here. If there's any updates on that, let me know in the chat. But we may be transitioning to a Churwersh, which to me sounds like a speech impediment. Churwersh. Not making fun of speech impediments, but it just doesn't have that same ring, right? That same teeth to it as chirpow, chirpow. Let's get it going. I'm going to gift out some memberships here. Been saving these up all April. Put a message in the chat here quick. Make sure you're subscribed. Make sure you've liked, put a message in the live chat, vote in the poll, engage with the live stream, help hype it up, and you will hopefully be the recipient of one of these bad boys. Rip off 5 now while I'm just kind of talking through. So, Powell. We've had 8 great years with Powell. He will no longer be the Fed chair effective in May. He will remain on the Fed board, though, until 2028. So we're not fully getting rid of him. He's not gone. He's not totally out of the picture, but he will not be giving the speeches. He'll just be one of the dots on the dot plot. It's hard to imagine. Truly is the end of an era. Just a single dot on the dot plot into 2028. His leadership has guided the Fed through some of the most chaotic economic times, at least in my history, our lifetime. Hyperinflation setting in COVID, the aftermath into the Biden era, now into the Trump. Oh man, some of the craziest times have been with Trump now. Dude, the walkthrough of the Fed building will forever just be one of my favorite events just in the history of chairmans. We should remind ourselves that the Fed board is a voting board. There's 13 votes. This is not something that is just simply decided by the Fed chair, the head chair. And he doesn't just make the decisions. It all goes to a vote. So while the voting is likely not to change too much, obviously we'll have a new Fed chairman who will have their own vote. We won't see a complete change, at least in that voting. Likely the dot plot, the members who have dissented, the members who are looking for cuts, and those who aren't are not going to change too much, but the guidance that the Fed will be under will change, and that could have some big implications. We could see, for instance, inflation measurements change, how they measure inflation. That can absolutely impact their policy. How they measure unemployment, that could absolutely impact the dual mandate. Not just the dual mandate, but the lightsaber dual mandate could be impacted by that. There's a lot of uncertainty, and that seems to be the theme this year, maybe last year, maybe the years before. A snowballing uncertainty. The globe is likely, and this is not ChatGPT, this is coming right off from me. The globe is likely sitting with their breath held, wondering what in the hell the United States is going to do next. When it comes to the Fed here. There are certainly many people with a bearish, pessimistic outlook. There are those looking positively and optimistically towards this Fed chair change. I do want to know your opinion, guys. The poll says it best. Powell is out as the Fed chair. Do you love it? It's time for new leadership. Do you hate it? Do you think it's a big mistake? Do you think it's kind of neutral, or do you think we just simply have bigger things to worry about? All of those answers are valid. I do want your input, do want your feedback. I'm curious how everyone's sitting here. Powell was originally put into power under Trump in his first term. He was reappointed by Biden, and now it comes to an end. All good things must end, except for our friendships. All the friends we made along the way. Those will last forever. I would like to know, what are your guys' favorite Powell moments? This wasn't a real Powell moment, but this is one of my favorite.
Fuck your puts. Fuck your calls. Jay Powell has you by the balls. God bless my money printer.
God bless it. God bless that money printer. Dude, the AIs of him, hilarious. Absolutely, absolutely hilarious. Let me see. We had pecans. We had the protesters. Oh my God, the protesters. And fossil finance, Jay. Dude, remember, this was like a spectacle. It was like real world drama for a while. The protesters, man. Powell saying the F word, shut the fucking door live. Like, what? You've had so many good moments, so many good times. Gina, I didn't forget, but how could I not start with Gina? Gina left us years ago. She knew this was coming. Getting ahead of the curve. Asian Gina briefly. Greena, we had Greena for one meeting. You know, as the quality of the Ginas declined, the quality of the Fed meetings also declined. They were hand in hand. Poll the poll, that's right. Oh, the Queen. Gina, where are you, Gina? Come back to us. Could you just come back to us for one more FOMC today? Please. It's actually kind of what is definitely going to be interesting today. Earthquake. The questions after the FOMC are going to be, I just can't even imagine. I've never seen this chair change hands. The questions, man. I wonder what they're going to come at him with. Hopefully he can open up a little bit more. I don't expect him to completely change character. I don't expect him to have a mic drop moment. I don't expect him to be like, F everybody, we're going to hike rates. You know, like, it's not going to be reactionary. He's likely going to just be his normal self, his calm, collected, dry, boring self, where they talk about the incoming data, how they don't have it. Where's the data? That's all great. What other things did I miss? It's been so many years. It's been like 1,000,000 years. Gina, chirp. Is pro crypto in a huge way. Look at his profile. I don't know, man. I don't know. I don't know if it matters that the Fed chair is pro crypto or not. It doesn't. I don't know. Crypto's done pretty well under the last 8 years. If Chair Powell is anti-crypto, it's done pretty well. Who knows? The data. Chair Powell swag. The Chair Powell song. Gina. The wonderful times we spent together. Of course, the most important. The times we spent here. All right. I'm going to read the chat. We're going to get into it. Let me go over this quick. So I usually start with this. I was getting a little sentimental there, a little off topic. It is 1:43. We have 15 minutes until the interest rate decision is in. Every Fed meeting, we have an interest rate decision, whether it is cut, remains the same, or is hiked. We have seen all of the above over the last year. People are hoping for cuts every single meeting. It's not going to happen. We're not getting a cut. We're not getting a hike. I think that the Fed could be close to cutting if it were not for, and it seems like a theme, if it were not for we'll call it a war, the conflict in Iran, if it was not for oil prices, if it was not for energy prices, probably we would be pretty close to a cut at this point. The job market is weak. Is super weak. The revised numbers showed that there was a net zero growth of jobs last year, over the entire year. New job growth just not there. That can be a strong, compelling factor to cut rates to try to stimulate that job market. Inflation certainly not looking in the cutting scenario. However, just today, during this live stream, we may see oil. Brent is closer. We may see Brent hit all-time high. Revise that. All-time high. A new yearly high. We may see Brent break through March's high set earlier this year. Not all-time high. Misspoke. It's not too far away. But it is reaching up there right now, waiting for Chair Powell. Just waiting. Remember, energy is likely the biggest factor when it comes to inflation. Energy impacts the bottom line, the cost of everything we do. And when energy is more expensive, everything is more expensive. It can take some time to trickle through the market, especially when it comes to fossil fuels. for energy. It's not just the energy cost itself, but the cost of oil. Oil is in everything. Oil is in all the products, every products. If we didn't have oil tomorrow, we would have like 90% less products. We wouldn't have fertilizer. We wouldn't have plastics. We wouldn't have all kinds of things. But it is, what I was saying is it is likely that this is the reason that we are not going to see a cut anytime soon. I don't think that we see a cut in interest rates until Q4 this year, if at all this year. And I think the data is going to back that. We'll see. We will see. So we have 15 minutes until the interest rate decision is out. We're going to all try to get that number, put it in the chat as quick as possible at 2 p.m. We're going to Google it together. At 2:30, Powell will speak. He will start with good afternoon, ladies and gentlemen. He will say the words data a million times. He will likely repeat himself almost verbatim from last month. We're going to keep our ears peeled for any changes in the language and the wording, as subtle differences can be very important. We're going to hope that there is some forward guidance during this meeting, more so than usual. Forward guidance in the sense of not just for the years and months to come, not just for what tie he's going to wear, but forward guidance as we kind of wait for this new Fed chair to emerge from his Fed chrysalis. It's going to be an interesting day. Do you guys know if did we get a confirmation? I know that Warsh went, like the vote's going to Senate. I don't know if the Senate voted on it yet. Be interesting if they could vote on it before the FOMC, but I don't know if they are. Periwinkle, yellow. It's never yellow. Is this the AI, Tom? Yes, it is, Tortoro. I'm a bot. Beep, boop. Beep, boop. Boopity, beep, boop. Oh, boys. What's up, Dutchy? What's up, Sharknado? Who else is here? If you're here in the chat right now, say hello. Real Sweens, why are you leaving? You said bye-bye. Don't leave. It's just starting. The spice is just beginning, my friends. It's just beginning. Say hello in chat. I want to know who's here today. Let's hype it up. I'm going to shout you out. While you say hello, that's right. What's up, Blob? Kong Jr., let me see. Crypto Stevo, FUD Expert, 𝐿𝐴𝐵𝐿, Pickle, my guy. Cheers to you, Pickle. My right-hand man. Johnny Crypto, Kong Jr., Prez Grump, DBM, FUDX, 88 Ace, Bob Saget. Who else is here? XRP Goat. What's up, my guy? Mark Dutch, Tonzi, Tusk, Side Gig. Joseph. It's harder to see. I haven't been practicing reading with these glasses on. This is hard to see. Matt Smeed, Cake Face. What's up, Brick City? What's up, bro? Taper. Who else? Foxy Thorny, the G. Tahoe, Lucas, Pickle, Toddy. I'm gonna get some repeats as I'm just reading. Crappy Tech, John Doe, Web Dev. What's up, brother? Moho. Who else is here? Super Rooster, Sin. We got a lot of the old names, a lot of the good names here. Sweens. Bye-bye to Chirpow. Menchie, what's up, brother? James C. Sharknado, I think I got you. I'm your Huckleberry. Crunk. Dave B. Abigail. Who else is here? McPooch, my guy. Steve-O, Soft Shell, Dio. Janix, Crispy. Hopium. Hopium Days and Hopium Copium. Not the same person. Brando, what's up, Mang Adventures? Tom Sen, great name. I like Cake Face. That's a great name. I don't know what that's supposed to be, but I like it. What's up, Josh? What's up, my boys? How are you all? Bring it in. Putting something in chat. Thank you. Shout out to you. Good idea. All Trace. I love you guys. See you at XRP Vegas 27. I heard that the Bitcoin conference is actually going to be in Nashville next year. I didn't go. That's why I'm here streaming. I'm right now in real time streaming here with you. It's the first one I didn't go to. Is anybody there right now? What color tie? Purple, baby. Love from India. Shout out to India. What's up, Shring Tech? How are you, brother? Das Peachin, my best buddy in the whole wide cryptoverse. What's up, Mark? Todd. Purple tie is always exactly. Ethiopian traders love you. Shout out to all the Ethiopian traders. I didn't know you loved me, but I appreciate it. I do appreciate it. What's up, Chris Pax? There he is. Mr. Pax himself. Doge is having a Doge day, some would say. I saw it was up past like 11 cents earlier. Man, I'm so scattered on this stream today. I'm out of order. I'm not going through the things I typically go through. In front of us, we have Bitcoin, SPX, or the SP 500, the dollar, which we might get rid of. We'll see. And oil at the bottom, oil being the spiciest of all of them. We have them on the 1 minute chart. On this chart, you will find 1, 2, 3 vertical lines. These vertical lines signify, as time passes during the start of the stream, when the interest rate decision is in, and when Powell begins speaking. You can watch these in real time. I'm going to warn you before we get into this. Trading today is extremely volatile. Though the last few FOMCs have not been quite as nuts as we've seen in the past, that may be the exception to the rule, not the rule itself. Many of these have sparked intense price action, typically resulting in leverage getting wiped out. For many, many, many years, we had a typical FOMC trading plan or blueprint, and we'll go over it quickly here. It's just an idea, and it shows you why it can be so dangerous. So, into the decision, we typically see price trend one way or the other, up or down. I'm just going to say up on the very low time frames right now. Trending up into the decision. On the decision, we tend to see a reversal. In this case, price would move down. When Powell speaks, we tend to see that reverse again, and generally, we end up right about where we were. And what happens is longs get wiped out, shorts get wiped out, and at the end of the day, you're just left there pissed. I highly recommend not trading this event, but if you do, and if you have to, if you're seeking your thrills, if you understand the risks, and you're willing to take them on, trade on our exchange partners, BYDFi and Fomc. Links in the chat in the video description below. Sign up with them and you'll get VIP roles in our Discord. You'll get some great bonuses, and you'll have, most importantly, great exchanges to trade on. Anyway, be careful. Disclose that. Disclose that. When we got to get the chart in front of us, we're going to watch in real time as Powell speaks, price reacting. Maybe a little 101 of the day here. Bitcoin not having a strong day into the FOMC. Not looking super hot. Holding on to Tuesday's low barely. That gives us a little hope. But a little hope might not be enough. Price action moved pretty closely to how we expected it to on Monday, looking for a short-term rally that is rejected. And that's pretty much what we're ending up with. Not the most bullish price action. Not the most bullish PA right now for the corn. But holding on for now. The biggest kicker, as I said earlier, oil is enjoying whatever is about to happen today. Brent nearing yearly highs, looking, in my opinion, to at least retest the next 24 hours, the next week. In April, 120. U.S. oil about the same, a little bit less mature, a little less progressed, only at 106 here, but a big gain today, 7.22%, and that is off the back of multiple green days from 82. Oil is up pretty bigly right now over the last week, 28.1%, and likely to follow Brent. If Brent retests this high, likely U.S. oil is too. As I've been saying for a while, I can't imagine oil not going to all-time high. All-time high is only at 130. We tested 120 in March. It seems weird that it wouldn't, but is what it is. The dollar, very choppy. Kind of mixed signals here. Now, when oil has rallied, we've oftentimes seen the dollar go hand in hand with that. Maybe that's what's to come. The dollar's had a very weird week, opening high on Monday, trading down, and now right about halfway between where it opened and its low from Monday. Not super clear on direction, though this higher low may age from April. May age well. Maybe looking for a retest of that 100. We'll follow it. Stocks, I believe, I haven't looked even that much into them. Indices, roughly at their all-time high, doing the same dance that they have done. You know, I'm going to remind you guys, I know there's some Powell haters. That's fine. You're allowed to hate them. I want to remind you, Powell is here. Stocks are at all-time high. Bitcoin is not at all-time high. Holding up pretty well off of its low for this rally, I'd say, from like, what, February. Gold just hit all-time high. Oil got near all-time high. Asset prices are up. Under Powell, I don't know. Do you really want much of a mix-up? That's the thing. Doesn't really matter what we want. We don't get a decision. We don't get a choice in this. But you don't really want to change too much here. This is pretty much exactly the course, exactly where markets want to be, I guess, where we want markets to be. Number go up. Number go up good. Number go up very good. Oil, dollar, Bitcoin. Man, what else we got? We got 4 minutes. That's what we got. Probably not even. My clock is always off here. Just dating time. Set time automatically. There we go. We got about 3 minutes. 3 minutes until the interest rate decision is published live. Why it's done this way, I don't know, but major news outlets get it like instantly via API or something. We have to wait until they publish it. But we're going to do this together. Get out whatever search engine that you use, whatever you want. Forex Factory has been really good at updating this quickly. I'm just going to pull up CryptoCraft just because I like using them. I don't know. They also do this pretty clean. It has a little countdown here. The expected rate forecast is nothing, is no change. I believe it's at like 100% also. Let's see. Refresh that 2 hours. There we go. 2 minutes, 1.1% chance. Actually, this is interesting. We've been talking about this and even kind of alluded to it maybe earlier. This was actually 100% no change this morning. Now it actually 1%, 25 BPS hike. I don't think it's going to happen. That's a hell of an outlier, but that is a change from even just this morning. Markets are speculating. When we look out, we can see about a 95% confidence all the way to the end of the year that these are unchanged. It's only once you get into Q4 that you start to see significant interest rate cut or hikes being factored in. And what's really weird is into 2027, or maybe not weird, you actually start to see higher interest rates being more and more favored. There's a lot to break down and a lot to digest there. But for now, let's get up our tabs. Let's begin the Googling. Everyone begin your Googling. Once the clock strikes 2, we can officially put this in the chat. I want you guys to be the first one to put it in the chat here. Whether it's a high cut or no change, put it in, and also include a source. I don't want just numbers. I don't want just answers. It has to be after 2 p.m. It can't be published yet. It's coming. Favorite cake? Vanilla buttercream, baby. You're here. Thank God, Wolf. Thank you, man. I was worried. What's up, Randy Greer? Whew. The Fed is it's always in a tough position. Always. It's a hard job. There's no right answer. We're saying there's a chance. There is a chance, which is weird. Dude, I can't believe actually that changed since this morning. And I say this morning, what I really mean is 2 hours ago or an hour ago, it was 100% no cut. Now 1.1% for a hike. We've discussed that on this channel for a while, that the Fed is likely closer to a hike than a cut. We'll find out. We're about to find out. Bitcoin looking at this decision, looking up ever so slightly at this decision. I'm going to move. Nope. Nope. Sun Beach. I'll do it later. Countdown has started. Get your tabs. It's 10 seconds. 10 seconds to go. Put it in the chat. Hopefully the audio's good. I spent a bunch of time fixing it. What's up, Nate? There it is. Bitcoin. Looking at the interest rate change. 2 seconds. Let's go. Boom. Bitcoin, a little bit of green. Let's zoom in. A little bit of green. We have 8 seconds now have passed since the interest rate decision. What do we got? I don't see it in chat yet. Put it in chat. I mean, I can do it, but I was letting you guys do it. Let me see. CryptoCraft is reporting no change. What do you guys got? 7.5 unchanged. 3.75 unchanged. Let's go taper. You win. 6.7, a little 6.7. What a little bit of this, a little bit of that. Oil not moving at all. Zero change on oil. However, the dollar gaining off of this. No change here. SP down, Bitcoin down. So far, a mild or mid reaction to no interest rate change. I think that we should keep in mind that that was expected. This is not a curveball. And for really intense price action to happen with an expected outcome usually is not what is in store. We'll find out though. Unchanged, baby. Unchanged. No change. Do you have any change? Just a little bit of change? Do you have a little change? You guys remember that South Park when like Obama was, you got some change? Change? No huge movements in markets at the moment. So that actually gives us a second to breathe here and look at these projected interest rates going out. Then we'll take a look. We'll take a look at like the Fed prediction markets. We'll see what those have to say. June. So June is, I guess, the next FOMC. We don't have one in May. That makes sense. For June, we are looking at right now 98% where we are. For some reason, they have 50 BPS cut on here. I don't know. I don't really know why it says 0%. Into July, we see a 3.9% for a 25 BPS cut. September, 7.6% for a 25 BPS cut. So that's all the way out to October, November, December, September, October, November, December. The end of Q3, we see a 7% chance of a 25 BPS cut and a 0.2 chance of a 50 BPS cut for some reason. Into October, that is exactly the same. We see the exact same odds and the exact same outcomes. December is where things get trickier. The last FOMC of the year, only an 88% chance of interest rates remaining the same all the way out to the end of the year. This is where it gets interesting, though, because we have both the 25 cut, the 50 cut, and the 25 hike on the table. That's getting very spicy. Very, very spicy. A 4% chance of a 25 BPS hike before the end of the year. Now we go into January, and this is maybe the kicker. This is where it gets important. You probably can't see this well. Huh? I'm just realizing that. We see that 4% jump up to a 12% and then the 50 BPS hike into play, similar to the 50 cut before then. Markets are really diverging, I guess. Analysts are really diverging on this outcome. Now, we are projecting far out. This is 2027 for January. We're going to have a new Fed chair, but it's interesting to see 12% 25 hike and 6% 25 cut, and then actually a 50 cut and hike on the table. That means that there's just no clear outcome, at least yet, though we can say no change is probably the clear outcome at 80%, right? Into March, there's a 25% chance we'll actually have higher Fed rates than now. 25% by April, but then that still the cut remains on the table. It's interesting. 25% looking all the way out into Q1 of next year. I think this is likely just following the Fed's dot plot. 36% by September of 27. What about by the end of the year? This is where it gets, look at this, like a perfect bell curve, perfect distribution. Wow. Of course, we'll update those as we go, and those will be impacted by unemployment numbers, employment changes, the labor market, inflation, all of the above, everything. And we'll be covering them week over week, whether it's Chirpow or Chirwersh, I don't know, Chirwersh. We'll be following it. What's your favorite food? What's your favorite food? What's my favorite food? When's the speech? Okay, so we have 20 minutes until Powell speaks. 20 minutes. We're going to look at some charts. We're going to, I don't know, reminisce about our best Powell times. Pineapple does not belong on pizza. You know, here, I believe that you just do whatever the hell you want with your pizza. As long as I don't eat it, I'm not eating it. Don't even give it to me. Don't even be in the room with me, but you can do whatever you want with it. I'm going to gift out 5 more memberships here. If you get these memberships today, I ask that you put the new emojis into the chat. The 𝐒𝐴 emojis. We're probably not even going to need these. God, it's the end of an era, boys. We made a thing. We made a mark on history with these Powell FOMC live streams, and you guys are a part of it. Hell yeah. Hell yeah. What's up, Darren? Ham, Lucky Thoughts. What's up, brother? Really quick again, if you're tuning in or if you've been here, make sure you've hit the like button on the stream. This is the final. This is the finale, the season finale of the 𝐒𝐴 files. It's the end. Make sure you've hit the like, share out the stream, hype it up. Put a message in the live chat, say hello, share your favorite Powell memory on this channel or not on this channel with us. Vote in the poll, engage with it. Engage. What's up, Kimber? Paul O'Doul, what's up, brother? Biz Now. Thanks for all the 𝐒𝐴 streams. Dude, it is a sad day. Even if you guys hate Powell, it's a sad day, at least for me, and in our community. We have good days ahead. We have brightness in the future. Sometimes it feels a little farther away than we'd like it, but we have brightness ahead. It's coming, even without Powell. We'll find something. We always do. We'll evolve. We'll adapt. We'll be here. OG status. That's true. Everyone here, I wish I had a sword. I officially knight you OGs. You're OGs of this channel now. You were here during the 𝐒𝐴 era. All the new people coming in later, they'll catch up. They'll catch up. It's going to be good. What's up, Sleek? Sharknado, my guy. Sharknado is the longest running member of the entire crew. And does this correct? I think that the final level gives you the 𝐒𝐴 image and you have it and it's just in time. That's crazy. I think I just changed that last year. Wild. First time watching. What's up, Mike? My Gmail. What a great name, bro. First time watching. Same. Last time watching 𝐒𝐴 though. God, it's so sad. All right, gifting away some of these. Just throw them out there. Throw them out into the void to see what's happening. The dollar gaining a little, very little ground on no interest rate change. Probably just not even related to this. Bitcoin down since the interest rate decision was in, likely to reverse by the time Powell starts speaking. At least that's what we typically see. Stocks about the same, move down. What is kind of weird though is just no change on oil. I would have expected oil to make a move or at least begin breaking out just on the finality of the decision. No change. Just sitting there waiting, just biding its time. You remember again, Chris Pax, you deserve it, buddy. Shout out to Chris Pax. What a good guy. What's up, Swiley? How are you doing? 𝐂𝐴𝐿. You'll miss Powell forever. Just as we've missed Gina forever, we'll also miss Powell forever. Bitcoin taking a little bit more of a dump-a-roon here. Bitcoin and stocks breaking their lows from today, moving lower off of the strength in the dollar. And I guess oil heard me talking about it because oil now beginning its ascent or continuing its ascent into green alongside the dollar's rally. That lines up. What's up, DBM? Congrats, my friend. What's up, Derek Merrill? Derek, you're an OG. Long-time watcher, long-time Gina lover, baby. It was hard enough to lose Gina. I mean, gotta lose Powell, too. We'll find our way. Will Gina come back? Crispy, if Gina comes back for this FOMC, it will be everything. It will make everything. It'll make my whole life better. I won't even be sad. I'll forget that Powell's leaving for a while. If she shows up, oof. That would be amazing. That'd be amazing. I'm not going to hold my breath, but doors open. Invitation's open, Gina. Come on down. Join us. You know you want to. You know you want to. Darren, congrats, my friend. We had some new subscribers. Shout out to you guys. 𝐂𝐡𝐚𝐫𝐭, Christopher, AS96, Wasson, Maya, Max, Naman, Roshan, Hopuz. Keep them coming. If you're stumbling into this channel for the first time, or perhaps not the first time, but you're not subscribed, hit the subscribe button. We're live here on YouTube daily, breaking down charts, live trading, covering FOMCs and other big global market events. Join us. Getting alerts. Seeing crypto break down. I got a Cetus alert from one of you guys asking me to look at that the other day. ScanDisk strong. What else can we look at? ScanDisk real strong. ScanDisk giving no Fs, just all the way up. Putting in new all-time highs today, 1,100, overshooting our 1,000 target from all the way back in the 500s. ScanDisk, at this point, I don't even really have analysis for you, ScanDisk. Like the 3, I don't know, like 1,400. It seems crazy. I don't know where you're going. We have no more fibs. There's just no more. There's no more moves to fib. We're out of moves. I guess nope. That's it. We're just gonna keep going. We're just gonna keep hitting that price exploration until we top out. Am I saying SanDisk wrong? I am. That is correct, Seabass. That is correct. Thank you for calling me out. Robinhood eating poop. Absolutely eating shit, dude. Opening up huge down off that pump. I think the pump was the removal of like the $25,000 minimum rule. SanDisk. One of them. That's for sure. One of them. Hood eating it. Giving back all those gains, man. Plummeting. What happened here? I feel like there was some bad Hood news. I think, honestly, the bad Hood news is just that nobody cares about Robinhood anymore. Robinhood, very tied up. What's up, Roshan? I see you. G Moore, what's up, bro? Very tied in, even though not literally, but kind of along for that ride of 2021. Like, Robinhood definitely reached its like peak of craziness, along with crypto, and just has not really like super outperformed since. I mean, it did move to all-time highs early in the end of last year, but no explosion. I don't hear people talk about Robinhood anymore. I think there's a lot of other options available now, which was not true back in the day. And I think the reality of not only is why crypto seems slow, but like trading overall seems slow, is I think these prediction markets and sports betting apps, gambling apps, I think are eating a lot of that degeneracy before it ever makes it here. It's sad. Speaking of degeneracy, World Liberty Finance, I mean, I told you guys every single time you've asked me to look at it, that the only direction I think this is ever going to go is down. Breaking to all-time lows today, trading at 6 cents after a high of 54 cents all the way back in August of 25. Send it to zero. I mean, that's along with almost every other crypto. It's true value. Seeking out that zero line. Go for it. Save and close. Bitcoin down $1,000 since the no interest rate change. Fortunately, $1,000 at this point is like 1%, so we don't have to worry too much. Hood had earnings last night. Were they bad or were they great? Because the earnings I don't know. We've seen great earnings do nothing. We've seen bad earnings pump. There doesn't seem to be a super strong correlation. What's up, CBK Wahoo? What's up, brother? People getting their tax money, putting in crypto? That would be nice. That would be nice. When do I think SUI will reverse course? I think SUI, honestly, I mean, not specific to SUI, but I feel like it's just going to follow the path of all the other alts that we've seen, which is, you know, like maybe it returns to its all-time high next cycle. Maybe not. Google hacking Hood. There was a Robinhood hack. Interesting. Removing the 25K requirement was an act of desperation. Probably. I have long said, though, that all those barriers to TradFi just like was a scam. It's just all a scam, right? It's like, well, only people with money are allowed to do this. Like, why? Why is that? Because it's a scam. Because it's rigged. Why can I not get this to look right? Doesn't matter. Oil's still moving. Stocks down, Bitcoin down, dollar up, and gas oil slightly up since the no change-o. We have 15 minutes till Chair Powell gives his final blessing. What should we do? What should we do here? We have 15 minutes. What's the best use of this time? Whatever happened to Safe Moon Monkey? I don't know. Another one that I said, please, nobody buy this. And I didn't. Hex. Another one that I said, no, please, nobody buy this. What about the most recent big rug in memory, Rave? What's Rave doing? Personally, love the Rave scene. Love music festivals. Love the whole vibe. Not a fan of Rave, even while it was pumping. Was not a fan of a coin, as this just didn't make any sense. None of it made any sense. The market cap of this was like bigger than probably the global Rave scene. Back to 80 cents, man. That was. This looks like some stocks. It looks like Carvana or whatever. CarMax, $27.84, trading at 76 cents today. We've had a lot of rugs along the way. 60K, please. You want 60K on the corn? We've been there. Did you buy at 60K before? If you did, then you're allowed to root for it. If you didn't, then you're not. Party's over. Which party? Do I have hope for DV? What's DV Crypto Surge? What's up, Kron? It's a must watch during the Chair Powell event. Which alt would I buy on the dump? None. None of them. They're all rugs. What about pecans? Now, pecans is a different thing. Pecans are unruggable because of the delicious factor. Because they're so delicious and so sought after, it's impossible for them to rug. I feel like someone's going to take those exact words and they're going to, like, I don't know, use it to like promote some rug. They're going to like AI me. Here we go. Have some more memberships. Gift it out into the live chat. Enjoy. Keep hyping it up. Keep hyping up the stream. The final countdown. The final Fomc. Maybe I should start pronouncing it wrong like that. Fomc. Foem. Makes sense, right? No. You guys love when I pronounce things wrong. You love it. I don't care what any of you say. You love it. I love it too. I don't think that anyone should be able to dictate how we pronounce things. If I want to pronounce something really poorly, then I will. Is it an accent? No, it's not an accent. It's just weird. I'm just being weird. All right. 15-ish minutes. A little bit less than 15. Keep hitting the like button. Keep subscribing. I want to see new subscribers. Clip it. Clip it, chat. Clip it. Dark AI. Yeah, dude. I every single day I wake up and I wonder if it will be the day that I see myself AI'd, like just shilling scams. And if I got to call my lawyer and be like, suit up, buddy. Suit it up. Dark AI channel. Little racist. Oh, y'all. What's my Solana address? You can send me some Sol. Oh, why you want to send me Sol? So I can have capital losses? Burn. I'm just kidding. Sol address? I don't know. You have to ask me in Discord. Jump in the Discord while you have a moment. Discord.gg/TomCrown before the real spice starts here. Powell speaking in just 10 minutes. Plenty of time to jump in our free Discord. People are chatting there, probably right now even, during this. Having their own little chat. 24/7, 365. It never sleeps. It's free. And if you sign up with any of our links, not only does it help support the stream, like Fomc and BYDeFi, but you'll get VIP roles in the Discord for free, and you will have me. If you ever have issues with those exchanges, I will go to bat for you. That's it. If Powell says he will not stay on as a governor, you feel like we'll moon. I wonder why you think that, Fly Fan. If Powell says that, I could see a scenario. I don't think where we moon right now necessarily. But I could see a scenario where markets start pricing in inflation more rapidly. That would be number go up, but if inflation go up faster than number go up, then you're not really winning. Powell has, you know, I've said this a lot. A lot of you guys don't like hearing this. Dude, I hate that. Wobbling. This room is not level. A lot of you guys don't like when I say this, but Powell did steer the ship well. Did he do it perfectly? Absolutely not. Did he make mistakes? Absolutely. Was he too slow or too fast or what? Not the right timing for things? It's happened. But here we are. We recovered from the pandemic. We recovered from some of the most intense inflation we had ever seen. We have so far had a soft landing. We haven't really landed yet. So maybe we can put that in his book on the checkmark side for him on the pro is the ship didn't crash. Powell has acted as a confidence source globally, even if you don't like him, even if you want him to cut rates and you want him to pump my bags or whatever, you want him to listen to Trump. The world has watched Powell, not just us, not just in the US. The world has watched Powell, and via his guidance, his consistency, and sticking to the plan, we'll call it, being an adult, the world has kept some of his confidence in us because of him. That is likely in question. I'm not going to say it will be lost when he's gone, but I'll say that that will be in question. It will again be up to interpretation. Markets may perceive that as a loss in confidence, a loss in stability, a loss of consistency. He's done the job. He hasn't done it perfect. I don't think anybody ever will, but he's done the job. We're going to see what happens. Win time. Oh, God. Oh, tired of winning. WYNN winning. Curious. Twilderness. There you are, buddy. You bet. I actually did today. Literally today. Speaking of inflation, I'm curious if you looked into more of the Bitcoin article about M2. Actually, I didn't. I'm guilty of that. I did not look into that article more. I'm sorry. I should have. However, I thought you were going to say, we do have a new data point for M2. This came out at some point between today and maybe Monday, I think. Between Monday and today. We have our March data point for the M2 supply. In January, we saw a 0.3% increase. Into February, we saw a 0.88% increase, which was one of the largest increases that we honestly have had since 2021's explosion. And now March's number comes in actually lower than I would have predicted at 0.26%. The M2 supply has updated, and thus all of our charts versus the M2 supply have updated as well. Now, the change wasn't huge, so it's not likely to have a giant impact. If you look at M2 supply versus Bitcoin, nothing really has changed here. Still the same chart, but it is there. The M2 supply, we can say this. Again, the M2 supply has hit all-time high. Again. And as it probably will every month, I don't know, until the next like COVID-esque event or something. This thing only goes up. All right, Bitcoin sideways. S&P sideways after the fall. Not looking hot, though. His presence creates fear. I don't know. Who do you think is his... You think like maybe retail is afraid of his presence? I guess. Not sure that's like really that important, but I guess. You know what? Actually, let's go, sweet bitty. Let's go. Waterfalls. Powell is up in 5 minutes here, but before that happens, we have just enough time to look at this. Bitcoin breaking down. However, let me refresh this. Bitcoin breaking down. However, it is testing a very important level. Testing a very important level here. This bluish line, this light blue line, bluish, I don't know why I said that. Of course it's blue. This blue line here is the descending high trend from the all-time high on Bitcoin. Now, we battled with this earlier in the month. We rejected. Things started to look grim. We retook it at the end of last week. Into this week, we have sold off, and we are now looking at a back test of that trend line right here in real time today off of the FOMC. I might actually add that trend to the FOMC chart, but the back test here, this is the end of the line. Intraday, we could trade lower, but we need to close back above. What is it, about 75K? We have finally back tested it after breaking out. It was a very clean break. We are here. It is okay. I won't say it's bullish or good that we are back testing it. I'd prefer not to. However, it is what it is. We're here. If we can find support on the back of this trend, we have flipped basically the bear market trend to support. That could be a very bullish signal. Incredibly bullish. It's too early to call. Powell's speech, we could see further selling here. Absolutely. But there we go. Perfectly back tested. Fingers crossed it holds. Absolute prayers. Thoughts and prayers, everyone. We're going to need all the thoughts and all the prayers after today. I'll add this to the chart. And we'll have just enough time, as Powell himself will be joining in T-minus 3 minutes. Something like that. There we go. There it is. Perfect. Ooh, that is something. There we go. A few dollars away, but like, damn, close enough. Bull run's already started, baby. Let's go. Let's go. Full moon. It's a full moon Friday. Today's Wednesday, but a full moon Friday coming. Welcome. If you're coming in, welcome. You are moments away from a historic moment. Powell's final FOMC. Final FOMC is starting in literally 2 minutes. Locked in. Here's your warning. Go grab your brews, roll up, settle in. We're going to dissect his speech in real time. We're going to watch price action in real time as it happens. And I'm ready. I'm ready for the questions. Maybe there'll be a surprise Gina visit. Gina, maybe. That would be just, if there's a surprise Gina visit, I'm all in. Like, I'm going all in. I'm throwing all my money and everything. All long, baby. I'm long on everything if Gina's there. I wanted to like look through the poly market and the 𝐂𝐡𝐚𝐫𝐭 Fed markets, but meh, we don't have time. They don't pay me to do it. Maybe we will after the questions if we're feeling it. Oof. Stocks are actually not looking so great. What, US 30's down almost a full point. Dow Jones almost a full point. The VIX is up. The VIX is up. I wonder if that's off the bank. I assume the Bank of Japan did no change of their interest rates as well yesterday morning. Let's take a look at this VIX. What's the VIX at? VIXy. We're going to have a good time. These meetings are typically very dry, but we do our best to make them a little more enjoyable. Wow, no, the VIX is up, but it is not up. It's not up at all. It's at 18. Never mind. Moving along, sir. Moving along. Are you ready? Yeah, this is like, go grab your brews. Like, go to the bathroom quick. Get your drinks. Roll it. Like, this is the last moments you have. Then we're gonna be locked in for the next 30 minutes. Powell should show up with a hard hat on. That would be actually kind of funny if he did show up like comedically dressed. I really think that Powell is just going to stay the course here. This man, even if you hate him, think of it this way. This man has, in his mind, of course, done a great job, the best job he could, over 8 years, creating this legacy, this history of his actions of the Fed during this time. I think it's incredibly unlikely that he will do anything in this meeting that will like jeopardize or put that in question. I do not think that will happen. We have no interest rate change as expected. What I'm really going to be watching, though, is what does he say about the job market? I think the job market at this point is going to be the focus and should be the focus for us, because inflation is just like, I don't think we're going to be able to tackle that. Until the Strait of Hormuz and oil production realigns, I don't think we're going to have any resolution there. The kind of compounding factor, it should be on soon. Compounding factor here is that the UAE is leaving OPEC. May 1st? Just more uncertainty in the oil market. I don't think that spells like calm resolution. I think that spells more to come. Anyway, Powell's joining us, getting up on stage. Make sure you're subscribing, liking, hype up the stream still. I'm going to be chatting in the live with you. I'm going to try not to talk over him too much. We're going to do some of our normal shenanigans. And I want to thank you all for being here. Really means a lot. It's the end of an era, truly. And we got to share it together. That's pretty awesome. Pretty awesome. Tears. Trump's going to be in the crowd. That'd be crazy. Just looming and then probably sleeping by the end of it. Because Lord knows I've fallen asleep behind these guys during these meetings. You just don't know. I'm very good at sleep talking and moving. You got a Discord, but so guys, if I message you in Discord or on Twitter or any other platform, if I do, meaning it's a picture of me and my name, it's not me, it's a scam. If you join Discord, you're probably going to get messaged by someone using my profile trying to scam. I do everything I can to shut them down, but unfortunately the platforms just do not care and they make it very difficult. Know that I am not messaging you though. It is not me. Here we go. The final chirpow down. The final chirpow down.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over, with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the Fomc as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Here we go. Sorry, the volume is down. On my side, it said it was loud. I don't know.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of an institutional architecture separates successful countries from unsuccessful countries, it is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. As I mentioned, you know, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and you know, the things that have happened in the last 3 months have I think, left me no choice but to stay until I see them through at least that long. You know, in addition, I don't see how this will interfere. My intention is not to interfere. You know, I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, you know, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time. In other words, that there would be no further change, so measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. You know, we really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, you know, in, you know, sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert. Short-lived. And monetary policy works with long and variable lags, so you know, you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut. That number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation's 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? You know, we have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because, you know, what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, you know, it's a much closer thing on the committee than it was in March, and you know, that makes all the sense in the world, it seems to me.
Claire.
So Claire Jones, Financial
Claire
Times.
Jones.
Just going back to this issue of the easing bias, we've now got oil
Claire
approaching
Jones now,
$120 a barrel when it comes to the benchmark Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. You know, well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. You know, at a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seem rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools?
So I'm not going to give him any advice through you today here, but I think communications generally is, I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you know, you can always be looking at new things, and if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Neil.
Hi, Chair Powell, Neil Irwin with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. You know, the last process was with Janet Yellen, with whom I had worked for 6 years, and so it was. You know, we were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Chris.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market, and should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many reports of, I mean, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, you know, setting up in people who were confined and like training them before they got out. And it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very, very similarly all over the world. That had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced. So, I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates. And for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
And just on the other issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and transparency, and I'm waiting for that, and I will leave when I think it's appropriate to do so.
Michael McKee.
Wizard.
Michael McKee from Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough. Is there any sense that interest rates might have to go up, or was this just a setup to sort of warn people that you're worried about the war impacts?
So nobody, the three dissenters and others who could have supported that, and others who were voters and non-voters who preferred it, they all supported the rate decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing? People argue that this is consistent with markets are doing. And again, it's a very fair question, but these changes, it's a form of forward guidance, and you want to make them in a way that will be sustained and continue to make sense, and not something you need to take back, fairly quickly. So I think a group of us, including me, didn't feel like we needed to be in a hurry on that markets are not confused about our reaction function. We don't have a problem to solve on that. But the other side of the argument is a good argument, too, as I mentioned. It's a perfectly good argument to be having, good discussion to be having. So, and it came out the way it came out.
Well, you've got three dissents in favor of two-sided warning. You've got yourself staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Not driving my thinking now. I mean, monetary policy is going to get made by, 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the Fomc, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's what every Fed chair has to do. And I think Kevin Warsh is actually quite well. He has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Haters will say this is Photoshop. This is a real image of Kevin Warsh.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as the governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can... Touche. Walk down the steps. What that looks like, and particularly around the policy discussion, how you're able to have your intervention and not be a shadow chair and not have a kind of an outsized influence over the process.
Yeah, that's just something I would never do, the shadow chair thing. I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know, and I had a pretty front row seat particularly with Chair Yellen, to whom I was close when I was working with Chairman Bernanke for 2 years. But I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus. And I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go in, if you can. If you can't, you can't. And I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be, they won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them, and then put something forward that has consensus. And I propose to be a very constructive participant in that process, really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in coming weeks? Because it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleed into core. And, here we are with 3 dissents now. What do you see as the prospect of a core inflation?
Those prospects are real. Remember, though, and they're real, and the real thing is we're going to have to wait and see. We're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral, or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. And so maybe a little bit of restriction or the high end of neutral is just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet, and it's so unknowable, because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know until we know. So fortunately, we're in a good place to wait and let things develop.
Thank you.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting, as opposed to the ones with with SEPs. Can you talk about why you see that as a net positive?
So we always said, when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving like a lot at every meeting, and sometimes between meetings, and doing that without a press conference, I think, would have been quite challenging. It's become the industry norm. It's the standard. I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to, and I do think it's quite helpful to I try to deliver a message on behalf of the committee, rather than 18 other people going out and delivering their message, and it's going to be all over the place, because we do thankfully have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year, what changes were considered, what you wanted, and what prevented any action on those changes? So
I'm not going to go into the real small specifics, but what we found very quickly was that making really large changes, for example, to the dot plot or the SEP, we couldn't come up with anything that had really broad support on the committee. And so we just moved on. We didn't really do as much on that as we might have. And I was never the world's biggest fan of the dot plot, but you can't beat something with nothing. And we've looked at a bunch of things, and it's something. Like I said, I think every new chair is going to look at our suite of communications and think about what would be changes. We are the only major central bank that doesn't publish a forecast. And that's because we have a 19-person committee, and you try to do that at the board. That's hard. At the committee, that's hard. It's hard if you do it at the staff. So it works. I think our communications are fine, but looking at doing it in a different and better way is the most natural thing in the world.
You waited for the last FOMC to say they're not a fan of the dot plot? What?
Thank
It's like
you.
our bread and butter.
Colby Smith with the New York Times.
Get him,
If I could
Colby.
follow up on Mike's question about hikes, are we right to assume that the hawkish outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on that debate?
Where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then, or if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now. So it really is going to depend on how things evolve, and that's really where it is. As I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
You just have to find that out empirically. Given our the fact that we're a big exporter of energy, and that our economy is far less energy intensive, oil intensive than it was during the 70s, the effects on the United States are really substantially less than those of Western Europe or Asia, who are feeling much greater effects from these things. The effects we're feeling in the current situation currently, and in sort of what's priced in, which is a relatively quick outcome. If this goes on for much longer and prices go much higher, then we'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. And those hikes may continue to happen. And other things are going to start to reflect airline fares I mentioned, and other products and services that are dependent upon petroleum and derivatives of petroleum. People are going to start to feel that.
Oh no.
Edward.
Oh no, I have no idea if the stream is still going.
Thank you, Chair Powell. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut at all this year, is what they're predicting. Do you think that we are at the neutral rate? Why or why not?
The neutral rate is we cannot know it with certainty. I think pretty close to the neutral rate. Yeah, I always had it between 3% and 4%. We're a little north of 3.5%, so that's well in the range of what I would consider a reasonable, but at the higher end of the range of what I would consider reasonable neutral rate. I think the labor market is still probably cooling off just a little bit, and I don't think there's much of a case for any case really for policy looking meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
I want to follow up on some of the other questions about your future a little bit. The first time we've seen 4 dissents now since October of 1992. Are you handing off a divided Fed?
I can't move. I can't change the screen.
The thing to remember is we have always had vigorous debates, and they're excellent debates. I have to say they've been really good. And we're in an unusually difficult situation. So we've really had 4 supply shocks. You can say more than 4, but at a minimum, we had the pandemic, we had the invasion of Ukraine, we had tariffs, and now we have Iran and the oil, the oil spike. So every supply shock has the capability of driving inflation up and unemployment up. And what do? The central bank has a really hard time knowing what to do. So the right thing to do is to try to balance the achievement of those two goals, and that's what our framework calls for us to do. But these are really tough, difficult judgments. You've got to have a forecast for each variable. You've got to think how long it's going to take to get back to target. You got to think how restrictive or not is policy. So it's only natural that you have a range of views on the committee. You know, people are going to see it different ways. They're going to have different risk tolerances and that kind of thing. I mean, if everybody agreed, that would be surprising.
Thank God.
I think it's partly a function of the extraordinarily challenging set of supply shocks that we've been dealing with now for 5-6 years.
Oh my God. I can't even show you. It's so
Thank you so much, Chair Powell. Selena Wayne with ABC News.
Thank God
Are
the
you
stream's still
confident that
going.
Kevin Warsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans expect to be paying higher gas prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're sending to the president?
I don't know what gas prices are going to do for the rest of the year. And it will depend on how long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets, so they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So it's not the answer isn't obvious ex ante whether you should move your rate over because of that. We'll have to see how it evolves.
New Asian?
I'll stand on what I said earlier.
I was so distracted.
Victoria.
Holy. That's not her.
Hi, Victoria Guido with Politico. During your tenure, Fed independence has come under pressure in a lot of different ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed? What sustains Fed independence?
Well, it's to a significant extent, it is the law. And, we've had to go to court to successfully so far to defend it. But the law does create a setting in which the Fed can and is directed to make monetary policy without consideration of political factors. And so part of it is the law. But it goes beyond that, though. There's a set of customs. There's a boundary line between the Fed and the administration, between the Fed and the Treasury Department. And we need to continue to respect those boundaries about what the Fed is responsible for and what the Treasury is responsible for and what the rest of the administration is responsible for. So some of it is legal. In fact, it's all legal at the end of the day, but it's more than just monetary policy. We don't want to use our tools we haven't wanted to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks, yeah, it would be good to repurpose those to serve other purposes, but that's dragging us into politics and into fiscal policy, so we've resisted that.
Well, and maybe another way of asking it, too, is do you think that Fed independence is as strong now as when you became chair, and if so, why?
Look, I think it's at risk. I mean, I think these legal assaults, if you will, as I mentioned, the institution is being battered over these things. We're having to resort to, the courts to enforce our legal, it's not so much independence. It's really the ability to make monetary policy without political considerations. That's what we're talking about, and we've had to do that, and we've been successful so far. But that's not over. None of that is concluded yet, and it's really important. It's not about people who work at the Fed or the institution. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's that there's a bright line between central banks who do one and do the other, and successful countries have uniformly, successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on political considerations. But we've had to fight for it, and I'd like to think that I'd like to think we can get out of that era and go back to respecting, what the law says and what custom has been, which is to, let the Fed do our thing. It's an institution full of human beings who work super hard to get things right for the benefit of the public. We're all human. Don't expect perfection, but do expect us to make, decisions without political considerations and the very best analysis we can bring.
Katerina Saraiva, Bloomberg News. How would you characterize what you've heard from your colleagues on your decision to stay? Do you have their support? And then have you heard concern from your colleagues about continued legal attacks from the executive branch? Is this something that others have, talked to you about?
So I think that I don't want to report on what my colleagues think. They can speak for themselves, but there are widespread concerns that these things may continue. That's all I'll say, and and that would be a problem. And so.
And then I just also wanted to ask about Governor Waller's speech on the reserve banks. Do you have any thoughts on centralizing some of those functions in the way he described? And then are you concerned that something like that could potentially be a slippery slope to, to consolidate reserve bank functions even more in such a way where the central bank ultimately loses some of that important regional information?
So we try to be good stewards of the public's money and efficient, and Chris Waller is particularly passionate about that. Of course, so are the reserve, so are the presidents, and it's a question of how do you accomplish it. We of course, and Chris said this in his speech, we want 12 strong independent central banks with their own staffs and their own monetary policy views and all that. But there are things that are done in all 12 which could well be done at one much more efficiently and with cost savings. And so there's a back and forth going on that, but everybody's on the same page. The other thing he touched on was the idea of removing reserve bank presidents from office over different views on monetary policy. And I would just agree with him so strongly that would be the beginning of the end of the Fed's ability to make monetary policy independently. If every administration could come in and do that, you're just another cabinet agency at that point. So that's not something that I would support. Chris said the same thing.
Christine.
Thanks, Chair Powell. Christine Romans, NBC News. I want to ask about legacy. When the history books are written, how do you think your stewardship at the Fed will be remembered for the past 8 years?
I'm going to just say that that's for someone else to say. I'll give you a mulligan on that.
All right. I'm going to ask you about misbehaving inflation then. You talked about those 4 big shocks, supply shocks over the past 5 years, and inflation still misbehaving. What's your message to American families who feel like inflation has not been under control for them really since the COVID reopening?
We're committed to bring inflation back down to 2% and sustainably. That's our goal, and we'll stick at it until that happens. We keep getting these events keep happening, which keep driving up costs, and the best thing we can do is to use our tools to guide inflation back down to 2%. I think trying to get there really quickly could be very costly in terms of job loss and things like that, but we try to get there over time in a way that does the least damage possible, and our commitment to that is never ending and unshakable.
How would you describe the economy outside of the misbehaving inflation? I mean, it's still awfully resilient given all of the blows.
I don't know that you can be awfully resilient. So it's actually quite resilient, I would say, because it's a positive thing. If I can have that amendment, yeah, growth is really solid across our economy. Some of that is that consumer spending is hanging in pretty well. The most recent data are good. And some of it is just the apparently insatiable demand for data centers all over the United States. So a lot of business investment going into building data centers, and every reason to think that that continues. So you've got an economy that's growing at 2% or better. PDFP, which is private domestic final purchases, which is really a better signal of a momentum in the economy, is actually higher than that. So that's a positive thing. If you look at the unemployment rate, it's 4.3%. So that's a low rate. That's pretty close to mainstream estimates of the natural rate. We've been there for a long time. So it doesn't feel like a good labor market to some who don't have jobs, because quits are really low, hires are really low, and there's effectively no new net job creation. So that's in a sense, the labor market is in balance. But it's an unusual and uncomfortable kind of a balance where people who don't have jobs will have a hard time breaking in unless somebody quits their job. So that's pretty good. Inflation is the thing we need to work on, and it's partly tariffs, which we think that inflation should subside over the course of this year, because it's kind of a one-time increase. It shouldn't be repeated, and that should start happening pretty soon. The energy inflation that we're getting should go through fairly quickly. And we'll just have to see how that works out. In the meantime, we think our policy stance is in a good place for us to hold and wait developments.
As long as no other problems happen.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. At the risk of beating the dead horse here, clearly 3 members objected to keeping that easing bias in the statement. And you said that the majority still didn't need to move to new language at this point. So does the majority of the committee still have a bias towards cuts at this point, or has the bias on the committee shifted away from cuts towards holding or hikes if that was needed?
So I think that, the center is moving toward a more neutral place, and that's sort of what markets are saying too. I just think, there's a lot of signaling going on when you change guidance like that. And so we just, I guess a majority of us didn't feel like we needed to send a signal on that right now. But maybe it'll come to that. And the reason is because, we're kind of waiting to see what happens with events in the Middle East and what are the implications of those events for the U.S. economy. So there's a group who feels like we don't need to be in a hurry to do that. We get it. And of course, we will move to a hiking bias if we want to hike, and we'll move to a neutral bias before that. But there was a difference over whether to do it at this meeting, at a meeting at which all but one of us agreed that the rate decision was correct, which was not to move.
And you just said moments ago that you believe Fed independence is at risk. Is it safe to say that you want to stay on as a governor to serve as a check and balance on that?
She's very cute.
I want to stay until I will stay until I feel it's appropriate for me to leave. And yes, that is really what is driving this. I'm not looking to be, a high-profile dissident or anything like that. I'm more looking at the other aspects of this and wanting to see that things have calmed down and we're returning to a traditional model of working with the people that you have and bringing them to consensus and respecting that consensus. That's what I'm hoping to see.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. You've made many tough decisions in your time at the Fed, and as your time as chair comes to a close and you think about your tenure and perhaps your legacy, are there any decisions that stand out as ones that you're particularly proud of? And are there any that, with the benefit of hindsight, you would take a mulligan on?
Yeah, it's hard. I wouldn't want to single out individual things at this point. I'll just say, we, all of us together, have consistently tried to do what we think is best for the American people based on our tools and our objectives that Congress has given us. It's been very challenging because we've been in a situation of supply shocks really for 6 years, and that's just a very different situation than for a very long time. What the Fed and other central banks were doing all the time was demand management. And, and there was always the inflation mandate, but inflation was low for 25 years. So this is a very different world and a much more challenging one where you have to balance the two objectives. And by the way, central banks that have an inflation mandate have to do exactly the same thing because they're balancing economic activity. So that's been challenging, and we've tried to do our very best through these really challenging times, and I'm really proud of the work that I've done, that my colleagues and I have done during these years.
Now, to follow up on some of the discussion around Fed independence, can you explain to the public why this notion of Fed independence, which might sound kind of wonky to some, is so critical? I mean, what are the consequences if either the Supreme Court rules against Lisa Cook or the Fed in the future decides to make decisions more around the political calendar instead of the economic data?
God, I hope not.
Every major advanced economy in the world has made the same decision the United States has made, and that is that they want to take the making of monetary policy, the setting of interest rates to support the economy, to achieve maximum employment and price stability. They want to take that out of the direct control of elected politicians. And the reason is elected politicians are always running for election, and they'll always want low rates, and that will lead to inflation over time. So after literally centuries of experience with that, the whole world moved to the different model, and it's worked great. I mean, this is the era in which inflation was under control for 40 years. Then we had the pandemic, inflation everywhere in the world, and now we have inflation that had gone pretty much all the way back to target, really close to all the way back to target, and now is being buffeted by the energy shock, and the U.S. buffeted by the tariff shock as well. So, but what I would say to the general public is that's the backstory, is that don't think about an institution being independent. Think about it this way, that you want people to make monetary policy and set interest rates to benefit the general public and to try to achieve economic goals, which are maximum employment and price stability, and focus only on that and ignore political considerations, completely ignore them. This isn't bipartisan, this is nonpartisan. So we want to just work directly for the American people doing these things. We don't think, oh, I want to do this because the president says it's a good idea, or because there's an election coming up and I want to speed up or slow down the economy. I mean, think about that. If that's what we were doing, we'd have no credibility. Markets would lose faith in us, and our ability to control inflation and have any respect would be gone. And let me say, whatever people say, the markets believe that we will produce 2% inflation. If you look at longer run expectations, markets believe that there's no sense in which our credibility in the markets has weakened. It's just not the case. It's people do get it, that this is our commitment and that we will achieve it, and it's priced in. If you disagree with that, then you can go ahead and bet against the markets, but the markets are pricing in Fed credibility.
Okay, we'll go to Richard for the last one.
The last question ever.
Thank you, Chair Powell. Richard Escobedo
Back
with
to
CBS
E&G
News.
now.
We're talking a lot about gasoline prices and even you mentioned airline ticket prices, both of which are up dramatically because of the war in Iran. And so I wonder, are you seeing that weigh down consumer spending in other parts of the economy? And if so, how worried are you that that will be a drag on growth?
You don't see it in spending yet. You really don't. I mean, as one of your colleagues said, the economy has been resilient. It really has. Not just this time, but it's been remarkably resilient for some years now. The U.S. economy has just powered through shock after shock, and consumers are still spending, and that's what the banks will tell you, credit card companies will tell you, the retail sales numbers that we got most recently. People are still spending, and how long can that go on in a world where if gas prices were to go up a bunch more, that's taking otherwise spendable money out of people's pockets. But right now, we don't actually see much slowdown yet, and certainly none from this. But you think logically you will, because people have a certain amount of money to spend. If they're spending 25% more on gas or something like that, then that's going to come out of other spending. But we don't see it yet.
One last thing. You mentioned those economies in Southeast Asia that are particularly dependent on petroleum. They make a lot of the stuff that American consumers buy. So was there any discussion today about whether or not those costs getting passed along to consumers is a real concern, and whether or not that might push up inflation?
So all of those things are in the models that we use to calculate inflation. So they're just parts. You can ask about anything like that, and they have a place. The staff has a place where they're looking at that and pricing in what will happen with higher prices and that kind of thing. So it's there. The effects are not that big yet. We're a huge economy. The import sector is only 10% of the economy, so we're not like a European country where 50% of the external of GDP is in the external sector. We're also, as I mentioned, we're an oil exporter, so we're not feeling the same kind of pain, and we're not likely to feel the same kind of pain that economies in Western Europe and certainly in Asia are feeling. Anyway, thank you very much, everyone.
Oh, my God. Oh, my God.
I won't see you next time.
No, we won't. Wow. That was it. It's over. Done. Like him, love him, hate him, doesn't matter, he gone now. The event has ended. Powell has finished his last FOMC. Truly the end of an era. The beginning of a different era. It's upon us. Churwish is coming. By the way, guys, I can't do anything. I can't even show you. I can try to show you. I can try. I feel like this is gonna wig it out too. I don't know. It's not really working either. Yep, it's probably all frozen. Yep. Anyway, I can't even show you. The streaming software that I use completely froze about 15 minutes ago, to the point where it is just a black square. It's a miracle we're still live, but I can't do anything. I've never had this happen, but I don't know. Whatever. Whatever. Powell's gone. Powell is gone. Still doesn't feel real. The upside here, the good news, we did get at the end there, in the last innings, we did see a new Asian Gina, a NAG for short, someone named Jen. So maybe 2 potential FOMC love interests in the future. I didn't expect it, but goddamn, do we need it? We absolutely needed that. Thank you for that. Give that one to the big guy upstairs. This was it. Man, the next FOMC will be in July with a new chair. The questions we had at the end were kind of expected, talking about kind of Fed independence, nonpartisan, non-political Fed. We have a battle ahead of us in the future to show the world that our monetary policy can be devoid of politics. It's not going to be easy. Powell did say it correctly, though, is if the Fed is political or partisan, either or, what you're going to end up having is just the Fed catering, or the Fed, constantly cutting, the Fed constantly doing quantitative easing, because these elected officials want to be elected. They want it to look good, and they're going to always want those things. Unfortunately, you can't do those things without letting inflation go. So it's going to be interesting. It is definitely in question what that will look like going forward. We're going to find out. We're going to be here. I appreciate you all tuning in today, my friends. Every single one of you, thank you so much for following all of these. This isn't the end, but it is the start of a new beginning, a new journey. We're going to do it together. The witch hat and the blunt thing was absolutely masterful, by the way. Absolutely masterful. Thank you, Wayne. Shout out to Wayne. We're going to be live again here on Friday. We're live on YouTube daily. Coming up on 8 years of being live on YouTube. So you should subscribe. You should join. Hit the subscribe button on your way out. Hit the like. Tune in on Friday when we're live. If you need some hopium, this is not nothing. Bitcoin back testing right now, the low of today, mega important. Back testing the all-time high trend. Touched in January. This is the first back test. Seeking out support. If support can be found here, we can get a bump and run set up, and we can see some moves to the upside. If we close below this trend or back underneath this trend, probably the groundhog telling us two more weeks of winter, 2 more months of winter, whatever it is. Man, what a day. What a day. I appreciate you all tuning in. I love you all. Thank you for being part of this community. Onward and upward, my friends. Onward and upward. Ground out.